Recent 13F filings show that Ray Dalio's Bridgewater Associates maintained its 3.9 million shares of SPDR Gold shares, which is the largest bullion-backed ETF, and 11.3 million in iShares Gold Trust, which is the second largest. Bridgewater also took a big stake in Alibaba, and that's what we're going to talk about today. So let's take a look. Bridgewater Associates and Ray Dalio bought 84,629 shares of Alibaba in the second quarter, worth about $15.7 million, according to a regulatory document filed recently. A back-of-the-envelope calculation shows that this stake was established at an average price of around $185 per share. Alibaba is one of the market's most heavily traded tech stocks and part of the FANG basket, which also includes Facebook, Amazon, Apple, Netflix, Google, and Chinese tech giants Baidu, Alibaba, and Tencent. Bridgewater's buying of Alibaba shouldn't come as a surprise. Last September, the hedge fund launched a big investment fund in China as it was granted rare access to trade in local financial markets. In a LinkedIn post from March, Dalio wrote that an escalating tit-for-tat trade war would be a reason to worry, but this investment is a way for Dalio to gain exposure to China without having to worry about the impact of a trade war with China. That's because the e-commerce giant is responsible for about 85% of e-commerce sales in China, which helps provide insulation from the trade spat. Alibaba shares gained 4% in the second quarter despite Trump's tariff trade spat with China. However, shares have recently slumped by about 7%. Let's go take a look at my charts. We're taking a look at the monthly chart on Alibaba, and the symbol is BABA. And for disclosure purposes, although I do not currently hold any shares of Alibaba, I have played this stock in the past. And the reason why I played it in the past, as you can see here, it has a nice smooth cycle, so relatively easy to play. We can move on down here into the MACD, and you can see what I'm talking about. Peak up here, a nice move on down, on back up, and it looks like now we're heading on down. So I think Ray perhaps is a little bit early because we're on our way down, and I think the price is going to consolidate more here. Yeah, you see that here in the MAC histogram. We're continuing to head on down. No real stopping point yet. Relative strength is above 50, but I think that's going to go below 50 here relatively soon. And that is also indicated by the stochastics. They're heading on down as well. The volume looks just fine. A bit of red here in the last few months, but not a real big deal. And then into the Williams. The Williams is going to hit bottom here pretty soon. And we can take a look at this period of time back here in late 2015 when it hit bottom. Let's go back up to the price chart. And that hit at the bottom with the Williams coincided here with a bottom in the price in that late 2015. But it might have been a little bit better just to hold on or hold off of buying the stock for a little bit longer to make sure that all the risk is run out of that stock. So maybe taking a position in early 2016 would have been better. And that's basically the same suggestion I'm going to make here, is this has some time before it's going to hit bottom. So just simply be patient. But now let's go to the daily chart. This is the 6-month daily chart on Alibaba. I wanted to look at the long-term chart as well as the short-term chart here, simply to show you that these cycles are relatively smooth and somewhat predictable. So a nice move in the cycle, up, and back down again, and we're starting to bottom here, at least on the short-term basis. And you can see that here as well. I think the fast line on the MAC is probably going to bottom here, and I would imagine that it's going to move sideways and then up relatively shortly. And here into the histogram, you can see that as well. And then the relative strength index. This has got a relatively decent, it's choppy. It shows that it's choppy, but this is actually a relatively nice sort of cycle in the stock. So again, on a long-term basis, I really like the way the cycle is. It makes it easier to buy and sell or trade, if you will. And that is also indicated here in the stochastics. And moving down, the Williams is also as well very, very cyclical. So I like this stock for that reason. But as I had indicated earlier, I think it's still a little bit too early on a long-term basis. I'm not going to recommend trading this currently. Simply, we do have some problems in the trade dispute. So who knows what's going to happen. But on a longer-term basis, wait for that consolidation, and then perhaps Alibaba might be a stock that you can consider once you conduct your fundamental analysis. So for today, that's ChewDog Charts. Thank you.